Alright students, welcome back to my new video. In today's video, as I've already discussed, that we will learn about journalizing a transaction. Basically what happens whenever an event in a business takes place, they first of all record the transaction, and this process in which they record the transaction is what we call journalizing the transaction. So by journalizing the transactions, we basically are just recording the transactions in our books of accounts. Today's topic will be this. Before learning about journalizing of transaction, you guys need to know the golden rules. You can go to my channel and view that video in which I have explained golden rules, so that you guys will be able to take or understand this video better. Let's get going and let's start with today's video. So basically we'll be doing journal entries based on the golden rules. So basically I am taking a sole proprietor business, sole proprietorship or any kind of business, and I am supposing that there is a business which is getting going. That a business which is just starting. So what is the first step that anyone will do? Of course, invest some amount of money in that, which we term as capital. First, I will tell you the performa or the format in which we record the journal entries. It looks something like this. So students, this is the format or the performer of a journal entries, and we need to record all the journal entries within this specific format. You cannot be doing a journal entry without a format. Format is absolutely necessary before recording a transaction in theory. So first we write in the books of, that is, of course there's a company or a firm or a partnership firm, anything XYZ for which we are making the journal or recording the journal transaction. So here will be named the company. Then journal entries, and the column looks like this, date column. Then comes the particular where we'll be recording the transactions. Then there is this extra column of LF. The full form of LF is ledger folio. Now what exactly this is? Basically what happens after we record a transaction in a journal, we need a consequent posting of the transactions in another account which is called ledger account. So we basically, to match the chronology, to match the serial number, we maintain a ledger folio column, but this companies do maintain. Theoretically, you guys do not need to maintain it. This column you need to make, but this will remain empty in every case. Then comes the amount. As you know that there is consequent debit and a credit for a transaction. Okay, so basically this is the debit column and the credit column. Now, as I had told that we will be learning some transactions. So first I will be showing you all the questions. The next picture will have all the questions, and then I will solve all the questions one by one. So here are the questions. I'll be posting the snap as well, and you guys, if you want, you guys can take the screenshot as well. Okay, now we'll start solving these questions. I'll be solving it without the format because there's not much space, but you guys, as I've said, need to do it in that format only. So here we start with recording of the transactions. So the first question that we had is, started business with cash rupees 1,50,000, right? Now how are we going to deal with it? Cash, I'm putting cash into my business, okay, and cash comes under the head roll account, right? So for roll account, the rule is debit what comes in and credit what goes out, right? So cash is coming in and hence cash will be debited. Now if you guys remember, in my previous video I told you that the amount of money that an investor invests in a business is termed as capital for the business, right? So this amount of money that the investor is investing will be treated as capital, and the journal transaction will be formed as follows. In the date column, of course, we will write January 1, which is the date, cash account debit to capital account. Now there will be two amount columns. Debit will be 1,50,000 debit column, and then credit here. Okay, the lines should coincide with each other, and then we have to narrate the transactions. That is, we have to write in short, in like 4-5 words, what this means. All the transactions starts with the word being started business. So I hope this entry is clear to you guys. Now the next transaction is open a bank account and deposited rupees 35,000. Now basically what happens, whenever we are doing the formalities, nothing needs to be recorded, right? But when we are depositing the money in the bank, actually it calls for recording because it is a transaction, because it involves money. Now again, bank is my real account, right? Because it is my asset. So the rule is debit what comes in. Now when I'm depositing money into my bank account, what is happening? My bank account is increasing. So whenever bank account is increasing, it needs to be debited, to I'll debit bank. Now what is to be credited? Of course, when I'm putting money into my bank account, my cash balance is decreasing, cash is going out. So cash in this case will get credited. So the journal entry will be January 5, bank account debit to cash account being deposited cash into bank, and the amount is going to be 35,000 in the debit column and 35,000 in the credit column. Now the next transaction is purchased goods worth rupees 13,000 from Radhesham for cash. Now purchase comes under the head nominal account, and we know that expenses needs to be debited and the income needs to be credited. For us, purchase is an expense, so it will be debited. And of course, when you are purchasing for cash, cash is going out as well. So the whole entry will be purchase account debit to cash account. Of course, see guys, there are two ways in which first you decide what needs to be debited, and then the simultaneous credit of course will be known. Because you know, a purchase transaction, of course, when you are purchasing something, either you are paying the cash that time itself or you are purchasing on credit. But they have said that cash is being going out, and cash of course is an account. So purchase, if purchase is being debited, we will credit cash. If not, cash, you can consider it from real account point of view as well. Cash is going out and hence credited. Okay, so the transaction that so the journal entry will be January 10, purchase account debit to cash account. Now if you guys have the doubt that why we have not mentioned Radhesham, because the transaction is for cash, and whenever we have cash transaction, no matter who we are purchasing selling goods to, we do not record the names because the transaction is settled at that time itself because payment has been made. Okay, the amount is 13,000. So I've written 13,000, and the narration will be being goods purchased for cash. Okay, I hope you have understood this entry. This entry is clear. Now next question is purchase goods worth rupees 50,000 for cash. Here again we are making a purchase transaction for cash and the transaction will be the same as before. January 12, purchase account debit to cash account being purchased goods for cash and the amount is 50,000. Moving ahead, the company has then sold goods worth rupees 18,000. Now again sale will come under the head nominal account and sale is an income, right? It needs to be credited and because the sale transaction has been made for cash. Now how do I know? Because nothing else has been mentioned. So we will take the transaction as a cash transaction and hence I will treat it as a cash transaction, of course. So the entry will be cash account debit because cash is coming in to sales. Okay, I hope you guys have understood. The date is January 15. Cash account debit to sales account and the narration will be being goods sold, right? And the amount is 18,000 and 18,000, right? The next question is paid expenses worth rupees 5,000. Now kids, what happens? Basically expense is a nominal account for us, right? Because these are the day-to-day expenses that we are incurring, operating expenses, right? Expenses or the events or the transaction that happens in the normal course of the business. So basically expenses is a nominal account and will be debited, and of course any expense you need to pay in cash, right? So the transaction that will be made will be expenses account debit to cash account. Cash debit because cash is going out. Being paid expenses. And the amount is 5,000 debited. Sorry. 5,000 in debit and 5,000 in credit. Right? Moving to the next question. Goods were sold to Radhesham for rupees 1 lakh on credit. Now there is a transaction of sales, but we have made the transaction for credit. That means we have not made the payment. Now when we were doing the earlier transaction, I said that when the transaction is settled, that means when cash is either paid or received, the transactions get settled at that point of time, and we do not need to mention the names. But here, because I am making a credit transaction, I need to open an account for Radhesham because he will stand as my debtor. Okay, because I'll be receiving money from him in the future. So in this case, Radhesham's account will be created and of course there will be sales, right? Now Radhesham is a personal account or debtor. Debit the receiver, credit the giver, right? Radhesham is the receiver of the goods. So he'll be debited and of course sales needs to be credited, or if you understand that sales is credit, of course then Radhesham is going to be debited, right? Both the logics you guys can use. Once you'll be accustomed with doing the transactions journalizing, you guys will understand it straight away. The date is 26th of January and the entry is Radhesham account debit to sales account being goods sold to Radhesham for credit, and the amount stands as rupees 1 lakh. Okay guys, now the next transaction is paid salary. Salary again is an expense, it will be debited, right? So we'll write the date January 27, salary account debit to cash account, because we'll be paying cash, right? It is 2500 and 2500 being paid salary. The last transaction is received bank interest worth rupees 750. Now what happens, kids? Of course we know that when we keep money in our bank account, bank tends to give us interest, right? But bank never give interests in cash. They straight away credit the amount in our bank account. So basically whenever bank is giving us interest, the bank balance is getting increased, and we know whenever bank is getting increased, we debit bank, right? So bank needs to be debited for what? For the payment of interest, which is our income, and we know all incomes are credited, right? So the whole journal entry will be bank account debit to interest account. The date is January 29th. Bank account debit to interest account being bank interest received, and the amount is 750. So these kids are the basic journal transactions, which are the preliminary or the beginning set of transactions that you guys need to learn, right? In my next video, I'll be sharing some special journal transactions, basically the tough ones, the ones that you will get at a later stage, but I hope you guys will be able to do the basic transaction journalizing questions on the basis of these transactions. If you like the video, please like and subscribe to my channel and share the video with your friends as well. I hope you find it useful. Thank you.